Are the earnings that you've seen so far, do they justify some of the valuations that we're seeing in the Chinese market? Are they feeding into any clarity for you on the fundamentals for these corporates?
Well, to some extent they are. You have to also realize that only about a third of the companies have started to report, whether it be it onshore, offshore, or via the ADRs. So far, the numbers are, I would say, that they're okay. We're still getting a bit of growth in terms of 6% on a year-on-year basis. But at the same time, it's still only accounting for about 44% of the full year consensus. And so as a result, there's still more than halfway to go during the second half of the year for the Chinese corporates in order to make up those earnings potential. But with that said, when we're looking at the CSI 300 trading now, slightly above 13 times 2021 consensus estimates, there's a lot to like, especially when you compare that with some of the other major markets like the U.S. where they're at 20, 21 times, or even Europe where they're close to 16 times forward earnings.
Ken, do you have a view on when those valuations here in China catch up with valuations in the US and Europe, and what that means for investors in terms of that window of opportunity?
Well, I think, when you look at it, it's gradually catching up, as we speak already, right? This year on a year-to-date basis, CSI 300 is up, 16, 17%. Europe is down. So I think the one market where CSI 300 probably still has ways to go is catching up with the U.S. But with that in mind, because given the fact that earnings growth remain robust, especially onshore, earnings growth for 2021 is looking fairly solid as well. We think that that gap potentially could ease further as we approach 2021.
Ken, David here. I mean, when I look at valuations, of course they're cheap with discount rates pretty much at zero. So I guess my question is, what part of it is actually looking really cheap from a fundamental perspective, what the companies can deliver, earnings, cash flow, what have you, and what part of it is simply cheap because of the monetary policy outlook?
I think it's a little bit of both. Obviously, investors sometimes say, well, there's some reasons behind why the valuations are a bit cheap. But with that in mind, when we're looking at sort of where earnings growth is right now, it seems as though some of the investors are still somewhat disconnected, with the onshore market in particular. And as a result, that's why the valuations are the way they are. But at the same time, we do see quite a bit of catalyst in China coming up in 2021. You've got the 100th year Communist, the Chinese Party anniversary, and then you've got the 14th start of the 5-year plan. So there's a lot that's going on in China in the coming year, which potentially could be a positive catalyst for the Chinese market.
Right, Ken. During the break, we were joking, of course, that you're here in Hong Kong. Usually, you're traveling. So the reason I bring that up is you cover the rest of Asia as well. EMs are back to square one. We erased pretty much all the losses of 2020. What looks interesting to you across the region, ex-China, and what doesn't?
Well, right now, if we look at across region, especially within the emerging Asia markets, the ASEAN markets looks very attractive right now from a valuation standpoint, because if you look at places like the Philippines, you look at Singapore, and just in general, the ASEAN market, they're trading well below their historical fair value. If you look at on a year-to-date basis, with the exception of Malaysia, most of the ASEAN markets have really underperformed, and rightfully so, because earnings growth is not is not pointing in the right direction for most of the ASEAN markets. But at least for 2021, things are gradually coming back online in the ASEAN region. So potentially there are some opportunities in that space.
Are you at the point now, Ken, where you want to be increasing exposure to the likes of financials, utilities, industrials? Are you feeling bullish enough to start to add some of those sectors?
Well, it really depends on where. If you talk about financials, we'll be a bit more skeptical in particular in China, given the fact that, the second quarter earnings were not going to be coming in that well for most of the Chinese banks. But then when we look at some of the ASEAN regions and looking at some of the banks, especially in places like Indonesia and to some extent Thailand as well, some of the banks are very well capitalized, and there's potential, for some of these banks trading in the ASEAN market. So you have to be a bit more careful as to, sort of how you position yourself within the region.